Last week, the world's largest bank, the same bank that paid $920 million for a fine on manipulating the precious metals market, was sitting on the biggest physical silver stockpile in human history. 750 million ounces, $60 billion. And then silver crashed 30% in a single day, the worst collapse since 1980. A bank in Chicago failed, and every real ounce of silver was sitting in a vault. There are now 356 paper claims on it. So this manipulation runs deep. And here's the part that nobody's telling you. JP Morgan spent over a decade suppressing silver prices, got caught, paid almost $1 billion in fines, and then quickly they flipped. They went on the biggest short in history to the biggest long, bought every ounce they could find. And now, while China is cut off from silver exports, while the COMEX vaults are draining, while physical silver in Tokyo is selling for 80% more than that paper price, JP Morgan is sitting on $60 billion mountain of real metal. So the question is, did they just engineer the biggest wealth transfer in history of commodities? And what does that mean for your bank? That's what we're going to be breaking down. So let's get into how JP Morgan has essentially been manipulating the silver markets at an unprecedented rate here. So if we're diving in to what we've got here, we've seen a giant crash that has caused the manipulation to kind of come through, right? We've been looking and seeing, all right, these silver crashes. I mean, look at this. Everybody says Bitcoin is too volatile, but look at this chart here, folks. I mean, that's a big fall from grace. I mean, this is insane. Silver ran from 121 and then got absolutely destroyed, literally 30% in a day. And then it dropped another 6% the next day. Now it's bounced around, $90 or so today, but this is the kind of volatility that doesn't happen in normal markets. The last time silver moved like this was in 1980s when the Hunt brothers literally blew up. So the mainstream media is even calling this historic. I mean, if you look at this, right? I mean, the mainstream media and the gold and silver markets, they're covering this stuff literally every single day because investor intentions in precious metals have likely not changed for the worse as of yet, because everybody thinks that the way that this market is trending, well, it's trending in a direction that can be looked at as market manipulation. But here's where we start to see some interesting things, right? Because if you look back at the previous times, the Bear Stearns collapse was absolutely massive, right? And it was all subsidized by the digestion of JP Morgan. Now, why am I pointing out 2008 and Bear Stearns? Well, we're seeing something very similar going on right now, right? I mean, we've seen essentially JP Morgan and this whole entire manipulation of the precious metals market go on right before our eyes. I mean, they're the world's largest bank, the number one COMEX dealer when it comes to the silver markets. So when one man has all that power, what are they going to do with it? And history doesn't always repeat, but sometimes it rhymes, right? So we're lining this out here where Bear Stearns essentially collapsed and it got absorbed by Jamie Dimon and JP Morgan at the time, right? So when this collapsed, the same day, silver hit multi-decade highs of $21. And not at all by any coincidence, Bear Stearns was massively short silver at that time, and then they got squeezed. The Fed arranges for JP Morgan to absorb Bear Stearns, right? Because, hey, when you're closer to that money printer, you could essentially pull some shots. So JP Morgan then inherits that massive short position, then they use it, right? They manipulate silver down from $21 to $9 an ounce. And they make billions on that way down, right? And what happened following that, right? Oh, well, the CFTC, they released this press release here and they said, oh, you know what? Everything, it's going to be okay, right? We've seen it. It's not a conspiracy theory at all, right? Because this is the United States government, literally from them, right? They've said that JP Morgan had conducted manipulative and deceptive conduct for at least 8 years. and hundreds of thousands of spoof orders. 15 traders, 2 trading desks. The head of both desks knew. And they got a little $920 million fine. Look, that's just a small portion of the pie here when it comes to the overall market and how much they made. And look, let's face it, JP Morgan is still in business. So if this $1 billion fine, let's call it, was anything that drastically hurt their business, well, JP Morgan, they wouldn't necessarily be around right now, would they? And that's the interesting part of all of this, is that we've essentially seen them, just kind of take this slap on the wrist and essentially keep it on moving, folks, right? So when you break this down, right, 2 traders were sentenced to prison in February 2025. It was Greg Smith and Michael Nowak, the legends here, right, who ran the entire global precious metals desk. They got a year and a day worth of sentences. Then they used RICO charges, the same law they use on the mob, in order to get out of this, right? Literally, what the mobsters get is what these JP Morgan trading desk guys got. It's insane, right? So when you keep on looking in these defendants and seeing how they were in it, right? Well, what else happened here recently, right? JP Morgan sold off entire $200 million ounce of a silver short position and then flipped long, literally like a month and a half ago, right? So this is where we've gotten the $130 per ounce physical price. And if you look at it right now and compare it to the price all over the place, I mean, the silver price in physical and the COMEX prices have essentially fully decoupled, right? Look at this. Because in the U.S. Arab or the United Arab Emirates, right, the Shanghai premiums are $8 an ounce above the COMEX prices. So you literally could just do some geopolitical arbitrage or some arbitrage, right? Because China has now been weaponized with all this, right? The Beijing reclassified silver from an ordinary commodity to a strategic resource in just a month, right? Only 44 companies received authorization to export that silver. And it's represent 60 to 70% of refined silver trade globally, right? So this is not just a JP Morgan and these guys. I mean, these giant markets, they're seeing how everybody is fleeing away from the dollar. And when you're fleeing away from the dollar, everybody's then going into these precious metals markets, right? That's where they're starting to go. And if you're in the precious metals market, then you're looking on how can I essentially arbitrage this and earn as much possible, right? And that's what we're seeing. We're seeing the precious metals market absolutely take off and keep on running. And I don't think it's going to be slowing down anytime soon, because when you keep an eye on this precious metals market and how everybody's fleeing out of this dollar, right? This is where, you see the arbitrage areas of all this. And the COMEX silver and where it's showing, it's getting a little interesting, right? Because there's that premium. The total COMEX inventory looks like 440 million ounces, which sounds fine, but only 124 million ounces are registered right now, which meaning that those 124 million ounces are the ones that are actually deliverable. In March 2026, all these futures contracts alone represent 500 million ounces. That's 4 times the deliverable supply in literally one contract. And this only works if nobody asks for the metal, right? So this is where it's interesting too, because there's a huge difference in the trading amount comparatively to the physical amount. There's 356 paper ounces for 1 physical ounce. Sound familiar? It means that essentially these guys are playing the fiat gains over here, right? So instead of utilizing the true scarcity of silver and trying to go through the, let's call it the hard asset aspect of it, we're seeing silver essentially just being printed all these paper receipts more and more on top of it in order to sell more, right? Because they want to profit more off these precious metals off it, or precious metal aspect of it, right? So when you see how these precious metals are starting to get manipulated, you got to ask the question, what's really going on here? Why is there so much manipulation? Because this is what triggered the crash, right? The CME group, God bless their soul. They're the ones that are trying to, predict the markets. This is what triggered the crash. They raised the margin requirements on December 29th. And $675 million were in margin calls. So all those leveraged longs got liquidated. The exchange basically chose to protect the shorts, the banks, by blowing up these long positions of silver. They did the exact same thing to the Hunt brothers in 1980. Literally the same exact playbook 46 years later. And this is the moment where we see the system essentially protect themselves, right? We're seeing all of the big banks, all of these big guys essentially work in cahoots, right? I mean, in the United States, we have, a conglomerate of big banks and money managers, but the biggest difference in the United States that it is everywhere else is that these smaller banks have a little bit of exposure here and there. Well, these regional banks, like say on your corner, right? When I was in college, I had a bank called Tennessee's First Bank, and that's what I did to get my track checks. And I was able to go to Tennessee's First Bank right on the corner near my house, deposit that check, and then pay my rent from there, right? But in this scenario, it looks like all of the big banks are essentially in cahoots against the small guys. And that's where we've seen essentially this giant market manipulation. And this market manipulation doesn't hurt the big guys because they can afford those billion-dollar fines. And they have enough purchasing power to essentially be those market makers, right? So seeing the CME group now start to protect itself and doing all this, this is where it gets interesting, right? Because this market manipulation has started and these guys are really, starting to, I guess, let's say, open our eyes a little bit of what is actually going on. Now, with this, right, we've got the banking system essentially in here trying to manipulate and pull a lot of strings. And at the end of the day, what this is all hinting at is just how true hard assets are really the way, right? Because I already told you guys, 356 paper ounces of silver for every one physical ounce. The only place in the world where that isn't true is Bitcoin. And so you don't want to sell your Bitcoin in a scenario like this. So you could go to saltlending.com/green-candle or the link down in the show notes below. They're going to give you guys an exclusive offer so you don't have to sell your Bitcoin, right? You could borrow against it, use it as the pristine collateral it was designed to be. And they're giving Green Candle listeners an exclusive offer. So be sure to go to the link down in the show notes and visit Salt Lending right now so you could get that exclusive offer, because this silver squeeze that's going on between China and JP Morgan is very interesting. And we're going to dive into this connection here. So bear with me. Make sure you guys are hitting that subscribe button as well. And on January 1st, right, what happened? China reclassified silver from a regular commodity to a strategic resource. What does that necessarily mean, right? It means that only 44 companies in all of China are now licensed to export silver. And you'd have to produce 80 tons a year to even qualify. China literally controls 60 to 70% of all of the world's refined silver. And they just turned off that tap, right? So now if you connect it back to the bigger picture here and how this affects the overall market, right? JP Morgan is hoarding it in the West. So JP Morgan is hoarding silver in the West, and China is restricting silver in the East. And industrial demand from solar, electric vehicles, semiconductors, that's not going anywhere. Those companies need silver, and they can't substitute it, right? They can't find some sort of alternative. And at the end of the day, we are trying to watch how this is going to be playing out. So while silver is continuing to get manipulated by these big guys, they're controlling the levers, right? So these big guys need silver and they can't substitute it. So where does the metal come from? It doesn't come from anywhere. And this is where the squeeze is happening. Now, taking it a step further, these guys know that there is banks, small regional banks that have short positions to this, right? And so what has happened? On July 30th, 2026, the same day as the silver crash, Metropolitan Capital Bank and Trust in Chicago closed because it had unsafe and unsound conditions and an impaired capital position. It was literally the first bank failure of 2026, and it had 261 million in assets, bigger than both bank failures from last year combined, literally. And what all happened there, right? It happened where JP Morgan saw that these guys had essentially over leveraged themselves in the silver markets. And they saw what we've all seen, right? Once you have a hard asset like silver, like Bitcoin, this is how you can cause a short squeeze and kill the little guys. And what happened last time this happened, right? I mean, I lined it out for you guys earlier with the Hunt brothers. Once they had this happen before, well, they were able to absorb the other bank, right? So JP Morgan was essentially to get a bigger book of business. They were essentially absorb a lot of these old clients. And now you see the pattern. Chicago has had its first bank failure for 2 years in a row now. This isn't random. When you have banks, short precious metals, margin calls flying, emergency Fed repo operations, this is what stress in the system looks like before it comes a crisis. Now, there's bank freezes and other things, right? And I've been talking about this for months. The banking system is under pressure and nobody in that mainstream media is connecting the dots, right? I mean, I've been talking to you guys about this, but the potential threats of freezing bank accounts, like these things are all adding up where the banking system right now is essentially looking at more of a grim position than it's ever been before, especially in the United States. So when you're looking at the banking system and just how it's operating, you got to question, is all this stuff really safe, right? Because it might not be. It isn't exactly the safest to hold your money in a small regional bank anymore. And to be honest, I kind of get why maybe some of these big businesses would want to go to a JP Morgan or a Capital one of these bigger banks, right? Because we're seeing so many regional banks really start to fall and collapse. So if this is the case, then we could get into a banking system model that's similar to Canada, which then a few top guys only set the rates. And then, it gets harder to get business loans. And then it's basically the whole banking system is just propping up the big guys, the big people who have access to these banking lenders. The benefit of having a regional bank is, hey, I grew up with, Sally Joe down the block. She's known me for decades. She knows that I'm trustworthy. So she'll help me out getting me a loan. Now that whole system is being engineered to essentially work against you. So when you're seeing the way that these regional banks are playing out, right? Everything that I'm showing you guys about this silver crash is a case study for why Bitcoin exists. Because there's paper claims that now cannot be redeemed, right? There are, manipulation going on by governments and different, companies that don't necessarily lead to the best types of environment for you, the consumer, right? Banks manipulate prices for decades. They pay a fine, a fraction of what they made, a system where 356 paper promises exist for every real ounce. And like I said, Bitcoin has no paper version. There is no COMEX for Bitcoin. Nobody can create 356 fake Bitcoin for every 21 million, right? That's it. You hold your own keys, you hold your own coins, no counterparty risk, no Jamie Dimon deciding what you get to when you win. This silver story isn't just about silver. It's about what happens when a financial system is built on trust and the people running it aren't trustworthy. Silver is proving that right now in real time, Bitcoin is the fix, folks. And when we keep seeing this market manipulation and these bank failures, well, this is where it gets crazy because, you know, Chicago, the rack, how it is, right? These Chicago bank failures, sure, Chicago isn't New York City, but Chicago is where a lot of the banking system operates, right? Chicago is the second biggest financial hub in the United States behind New York City, which, when you have, I think Chase Bank is actually headquartered there, and a lot of these former Wall Street guys, they all work in Chicago. So, I mean, it is close to the money printer, and we're still seeing a lot of bank failures coming out of Chicago. But there's a lot of things that you guys can do to help support Bitcoin and the Bitcoin network. One of those is Bitcoin mining. If you guys want to get non-KYC stats, you don't want to know. You don't want the bankers to know how much Bitcoin you have. Because in this day and age, we're getting so closer to more and more people. Let's say that arbitrage that we're seeing right now between silver in China and silver in the West, that arbitrage that I was lining out to you guys earlier, that might be the same case between KYC and non-KYC coins. The only way to get non-KYC coins outside of potentially trading it back and forth with friends, peer-to-peer, a bunch of different ways, how you can do it without anybody knowing is by stacking sats through mining. Simplemining.io/greencandle. You can go in the link in the show notes below. And then if you go there, you can then get some potentially tax harvesting, do all that great stuff, and also support the Bitcoin network. So I highly encourage you guys to do that because the Bitcoin network, we don't have bank failures, right? When you see these bank failures come out and Jamie Dimon and doing all these things, right? Essentially, you see the volatility playing out in the silver markets, right? Before, people were telling us Bitcoin is too volatile. We can't be dealing with Bitcoin. Man, we are getting smoked right now down to 72,000. But I mean, I know all 100 plus of you guys across X and YouTube, I know all you guys are still here because you know the true value proposition of Bitcoin. And it's getting value outside of the system. So, as you guys are saying, stack gold, silver, gold, and honey is crazy. I don't know where you got the honey from. Maybe you're trying to call me honey. I don't know, brother. I kid. But just remember, when you're looking at how these banks are operating in the silver markets, right? I mean, essentially, there's just this impasse between China and JP Morgan. The world's largest bank and the second largest economy in the world is literally fighting over one precious metal. It makes you think, right? Because how are we going to see these precious metals play out? I think once we continue to see these gold and precious metals, I think people are going to start to wake up to the fact that we do see, just this arbitrage between 356 paper ounces of silver and 1 ounce of physical silver. People are going to want that arbitrage. And once people start to figure that out, that's when they're going to start to go to Bitcoin. When they're going to want the physical assets, they're not going to want any of this paper bullshit that they're trying to sell you at these banks. And this is where the true manipulation comes in. And so we'll see how this all plays out. Make sure you guys are smoking that like, hitting that subscribe button, telling a friend to tell a friend, and I'll catch you guys all at the next one.